Welcome back to Kramer's Millionaire Maker. Here again is Hilary Kramer.
Welcome back to the show. We are focusing on initial public offerings because that's what you want to be in. And we're going to talk about Instacart. It is expected to be an amazing IPO. And, well, I'm going to tell you, you should be buying Instacart. Let's take a look at it. I want to tell you first what Instacart is. You're probably driving in the car, or you're listening to me, or you're watching me, and you're saying, what is it? It's an app-based grocery delivery and pickup service. It operates in the United States, operates in Canada. Founded in 2012 by former Amazon.com employee figures, and it's headquartered in San Francisco. Instacart was one of the absolute first companies to start carving into that grocery delivery niche. Remember Peapod from 1999? In 2015, it started to encourage shoppers at different stores to become part-time employees and work for Instacart. The shopping angle is what separated it from the delivery competitors in the gig economy like DoorDash and Grubhub and Postmates. Something that could make investors question Instacart is the fact that there could be some, there's not a big wide moat in terms of competition because others can get into the business. And they have faced some conflicts with those gig workers, with Uber, Lyft, and the issues revolve around whether Instacart shoppers should be treated as employees or contractors. But that will be worked out. And despite all this, Instacart had a phenomenal year last year during the COVID-19 outbreak. And here's why it might be some real promise in the stock. I will tell you, first of all, financially, Instacart has grown quickly since it was originally valued at $3.4 billion in 2017. Next year, $7.6 billion. In June 2020, Instacart was valued at $13.8 billion. There's all these pre-IPO rounds, but you're still going to make money on it. Instacart raised another $200 million recently from some really top venture capitalists and is now valued at about $18 billion. And last April, Instacart reported 300% growth in demand. And Instacart is not very far behind Walmart in online delivery sales. That's pretty amazing. And the company grew from 200,000 customers to 350,000 customers in about 6 months. There's fast flexibility. Now, let me tell you a little bit about Instacart's front office and kind of the business model and the way they do partnerships and why it's a special company to buy. And by the way, you should go to hilarykramer.com, sign up for IPO Edge. That's my newsletter. I have 1,200% increases in the companies I put in there. We have a quadruple. It is an amazing, amazing product. Or you can call Grant. He is my customer service rep at 202-677-4492. And let's go back to Instacart. They have a partnership with 500 retailers. That's pretty big. And, an association with names like Walmart are very good for the company's exposure. And through all of this, Instacart has been able to distinguish itself in this competitive, West Coast gig economy. Now, there remains some pressure from gig economy employees to raise tip minimums and treat shoppers more like employees. There was a California law that went into effect 13 months ago regarding independent contractors, and it could affect Instacart, but I'll tell you, it is what you want to be in. That's an IPO. That's a company you can buy that day it goes IPO, and you are going to probably be up 50% within the first few weeks. Now, some people would say it's prudent to watch an IPO, for a few months before buying it. I say get in early because the big funds, it's one of the few places as an individual investor, you have some real advantage, which is that many of the big, huge funds, big funds like Fidelity funds and Vanguard funds and Wisdom Tree funds, many of them have mandates. They have to wait for 2 full quarters of earnings releases before they can buy into an initial public offering, or these companies even going public at a $20 billion valuation might be too small of a market cap for them. So you can get in there. You can be stealth, right? So even though you got some competition here with Instacart, they're all going to want to be in it, especially with the exposure to 500 retailers and the fact that Instacart, everyone just loves them. And Uber and Lyft, they have, of course, the advantage in the ride share business. But Instacart, that's about delivering. So in the near term, it has performed well. And I think an informed decision, again, is to be buying Instacart. And what's better than this great American company, right? Pickup service in the U.S. and Canada. And there's a website, there's a mobile app. And I just think it's brilliant. And by the way, at Porvo Meta, he was the Amazon.com employee who sprung out, and he founded in summer of 2012 Instacart. And he was actually on the Forbes 30 under 30 list. And he actually worked also at Qualcomm. He was at BlackBerry. He's an engineer. He's good. The market's going to really love him. So go ahead, invest in Instacart. This is Hilary Kramer. I am the Millionaire Maker. Go to IPO Edge. Initial public offerings are where you want to be. The market's hungry for new stocks, new investments. I've put you in a lot of them, and they have just done phenomenally. And I'm going to keep doing that. That's where you're going to be making your money in stocks in the coming months. Again, we'll be right back with more initial public offerings that you need to be buying.